Hi guys, welcome to SavvyMoneyShow. Me, your host Sean. Well, they say no one can time the bottom, but today I'll be giving my predictions for when the bottom of the market will hit. But first, let's get into the show. You have Robinhood to lay off 9% of full-time employees, which hit the stock. This was back in April. You have Coinbase in June has extended its hiring freeze and rescinds offers to staff. Bird laying off 23% of staff. This has come in June. Now, this is an electric scooter company which has predicted huge growth. Desktop Metal lay off 12% of staff. Now, these are huge numbers, and it's consolidating its facilities to reduce expenses. PayPal laying off more workers and cutting headquarters staff. Now, PayPal is a huge company. Yeah, and these stories are all around. This isn't isolated. You're getting bigger and bigger companies, Klarna, all across. And I did a video about Amazon reducing its warehouse space, and I'll be doing another video about Amazon and the big boys. But this is a huge. I'm not saying this is going to be like crash bearing, but let's say for argument's sake the SPY dropped 40%, it would take us down to the bottom of the COVID crash levels. Anyway, don't forget to hit the lovely like button and sexy subscribe button, and don't forget the bell notification. You'll be notified when a new video gets uploaded. And the free links in the description below. You can pick up a free share worth up to £200. And check out our Discord. And if you want a more in-depth analysis of any stock or market conditions, then why not look at our upgraded membership program and support us. I'm not saying any of those companies are bad. Actually, I think Hood, as you know, another major crypto Goliath has taken up a position in Hood. Coinbase, I think, is a good starting point when you look at its valuation. PayPal, again, I think is in a good value territory when you consider it owns the second and third fintech company. So Desktop Metals, again, one of the best 3D printing companies. These are not speculative companies that are on the verge of bankruptcy. Anyway, CPI versus RPI. What's the difference? Well, Consumer Price Index is what's reported by the Fed, and in May it was 9%, 8 to 9%, and the real-time price index was at over 11%. Now people are saying real-time price index is 15% and above, whereas the Fed is saying 8.6%. Why would the Fed be giving us a lower number? Well, because whatever the CPI is, the Social Security has to match that. Companies have to give higher wages because otherwise it's deemed a pay cut. For instance, Royal Mail are in contest with their company, saying because of inflation, anything below inflation will be a pay cut. So if the Fed or the government comes out and says it's 15%, Royal Mail won't give them a 15% pay rise. So they will be up in arms if they come out and say 8% and they meet somewhere in the middle with a lump sum. Sorry about that. Then it seems more manageable for companies. Everyone thinks the Fed is going to do a triple Fed hike. Why? Because if you look back, we keep getting compared to the 80s, but in the 80s, the Fed chairman then actually raised rates to 19% to bring down inflation, which was 14%. And the Fed is saying it's 8.6% and rising. As I said, real-time inflation is at 11 to 15% and rising. So he may want to get it under control now. Why now? Why the urgency? Because they usually want to stop it before an election so that they can cut the rates before an election. So they will want to hike them up so that just before the election they'll drop it. So now comes my prediction. I think July 12th we will see a bottom. I'm just an idiot on the internet. Don't go by what I'm saying. However, July the 12th, I think we'll see a bottom, and then we'll see them cut rates, not the next Fed meeting, but a meeting after, and you'll see people going in, and you'll see it lift the market. How long for depends whether they keep cutting rates or whether they have to go back in and raise them again. So what am I looking at? First one is going to be Upstart, UPST. Why? Because I think it's going to have a good day. 33 has been a good level of support. It has hit 25, I know, but it seems to be consolidating around that 33 level. I think it will have a good day, go up, and I think it will come crashing down again. I think long term it's a good hold anyway. Remember, this has hit $400 a share not long ago, and I'm not picking up shares in companies just because they're all-time highs. I'm picking them up because of what they have behind them. It's a profitable company, and I think it all comes down to whether or not their software. And the software was a problem with Zillow Group, and look how much it cost them just because the software wasn't working properly. And you can see where it went from $125 to $32. And that wasn't a crash. That was all the money they lost because the software wasn't working properly. But the main one is PFLT, Pennant Park Floating Rate Capital. They're a monthly dividend stock. I had them in my video about monthly dividend stocks to pick up, and they have a PE ratio of 10.6 and a forward dividend of 10%, and it gets paid on the 16th. Why would I be watching this? Well, firstly, they're about to pay a dividend. Market cap is 492 million versus 971 million. There's a P of 11.5, forward P of 10.5, price to book 0.95, price to sales of 10. Price to sales is high, I get, but they operate on rates. So the higher the rates, the more money they bring in. So I will pick up more of these, and they get preferential taxes if the more they return to shareholders. I'll see you in the next video. If you found any of my videos helpful and you'll want to help me make more, you can support me by buying me a coffee. The link is in the description below.